Wow, the internet is going crazy right now over a potential Bitcoin ban. Here's something from Google that we need to take a look at. The Bitcoin price is surging, breaking through the all-time high, and now it's correcting. Now we're heading back toward 120,000 US dollars. What's going on here? We really need to take a close look at this. Even Jack Dorsey is issuing a warning about this now. We also have Katie Wood, who is taking a bullish stance here, reaffirming her price target and making it very clear once again. No, Bitcoin is going to rise above 1 million US dollars, folks. Samsung Mao is talking about two important scenarios that could potentially be coming our way now. Now it's being decided whether things will continue bullishly here or if we'll first see a bearish turn. In my last video, I mentioned in passing that I hoped we wouldn't already be correcting again by the time the video went online. And that's exactly what has happened now. Let's take a look at the whole situation. But before we dive in, smash that like button below for higher Bitcoin prices, for new all-time highs, for a strong Bitcoin rally here, so that the Bitcoin price can really go wild. Hit those likes down below. And of course, the whole situation with Google is getting really interesting now with the potential Bitcoin ban. There's also a really fascinating twist to this story. But guys, before we get to a Bitcoin ban, we see that analyst Fred Krueger is making a very interesting case here. He's talking about what he thinks will happen next year. And of course, this is very bullish for Bitcoin. First of all, we're seeing massive interest rate cuts from the Federal Reserve. We're only going to have about 1 to 2% left. Right now, interest rates are over 4%. That means we'd be at the level Trump wants, maybe even a bit lower. Trump actually wants rates to go below 1% in some cases. But of course, that would probably be received massively by the market at first. New fresh money, lower interest rates, lower borrowing costs. Then here, yield curve control is expected, the 10-year interest rates. That means quantitative easing, which in the past has always been the signal, the sign, when Bitcoin really took off. He is then expecting an economic boom. Of course, if the economy is massively stimulated here with new money, the economy will boom and the dollar will fall, even against the yen. And we'll have headline inflation running back up to 3 or 4%. That means we'll see inflation continuing to rise, just like Jerome Powell has already said here. He says, hey, we can't set interest rates too low here. Otherwise inflation will get out of control. That's his base case here. He also says, rather modestly, that this isn't necessarily an environment where Bitcoin will perform poorly. But quite clearly, no, this is an environment where Bitcoin will perform very well. And that's going to happen next year. That's why a lot of people are expecting an extended cycle here. And something else that's really important, the last two bear markets. What happened when Bitcoin actually took a hit, when we entered the bear market here? Write it down in the comments below. What happened? What is the single most important thing that happened here? I don't know if it's the single most important thing, but the indicator. Interest rates started to rise again. And now, what are we seeing? Historically, the cycle should be over by the end of this year, but we're not seeing any interest rate hikes. Zinssteigerung is bad German. We're not seeing any interest rate increases on the horizon. In fact, it looks more like rates might be cut. So we're definitely missing a major signal here that would indicate we're entering a bear market, even though a lot of people are already talking about a bear market again. In fact, it actually looks more like what Fred Gruber is saying, or what Adam Back said yesterday, that we're really in an 8-year cycle instead of a 4-year cycle. I mean, an 8-year cycle. I'm not sure if I completely agree with that yet. Samsung Moore also says there are now two possible scenarios ahead of us. We're now facing a big decision here. We're either going to see the Godzilla and Omega candles here, which will suck all the oxygen out of the room and cause the altcoins to lose 30 or 40% against Bitcoin, or the altcoin mania will reach its peak and trigger a massive sell-off, as he says here, because the bag holder dilemma gets thrown off balance. Bitcoin drops in the short term and then rises again, while the alt season totally crashes here. That means if the alt season kicks off here, then Bitcoin would suffer a bit. Or it could be the other way around. Bitcoin explodes and the altcoins take the hit. That's definitely Samsung Mao's scenario. You can let me know in the comments below if you think that's realistic. And now let's actually take a look here on Google at what they posted about Bitcoin. And this really shocked people here. Here, the Google store has just banned Bitcoin and crypto wallets in the US and the EU without a federal license. So that was basically the news that came out here. First, the blog Trainer also wrote an article about it. Google bans non-custodial crypto wallets from the Play Store. And a lot of people immediately took this as a ban. Here, Jack Dorsey also writes, this is just terrible. Here was also the official announcement. Due to AML and KYC issues, non-custodial wallets in the USA are effectively banned. That means you can no longer use wallets in the Play Store that don't have a license. For example, no banking license, no MiCA license, and so on, that don't do KYC and so forth. And that's actually the basic idea behind Bitcoin, that you have a peer-to-peer system where you don't need a third party, some exchange, or a wallet with KYC and so on. And of course, there are some really big and well-known wallets that work without KYC. You don't necessarily need a KYC wallet. You can just download a Bitcoin wallet and start using it within 2 seconds. You don't have to register or anything like that. But of course, that's the dream for a lot of people in the EU, and also for many people who want to control Bitcoin here, to squeeze Bitcoin into a kind of straitjacket. And so, many people immediately saw this as a massive attack on Bitcoin. For example, Kali Bitcoin, a well-known developer from Germany, also commented on this, saying there are countless wallets where the developers have no control over users' funds. There is absolutely no service consultation between the wallet developer and the user. It has always been the owner's free choice to run the software themselves. This policy makes absolutely no sense. It's almost as if their definition of a Bitcoin wallet has ignored a whole decade of innovation. I hope Google quickly reverses this terrible decision. So this is a very, very critical assessment, and I completely agree with it 100%. Seth for Privacy, also a privacy advocate, writes here and adds, I can't imagine a world where this actually applies to self-custodial wallets. How could a self-custodial wallet even obtain a license? My theory is that this should only apply to exchange wallets, apps, and so on. And then, fortunately, there was a lucky turn of events here. Now I got up, I'm checking the news here. Let's pull this in, and I see. Hey, Google is responding here. Thank you very much for the tip. Non-custodial wallets are not subject to the Google Play policies for cryptocurrency exchanges and software wallets. We are updating the help section to clarify this. So this is a very, very good turn of events, that you now definitely have the green light to have self-custody wallets. I mean, that would have been shooting themselves in the foot. That really wouldn't have done Google any good either. So what would Google have gained from that? Unless maybe they were under pressure from governments or something like that. I always say, get yourself a hardware wallet. I'll put a link below to a TREZOR hardware wallet for you. Guys, everyone needs a hardware wallet. Everyone should withdraw their Bitcoin from exchanges, from any trading platforms, from third parties, and so on, to minimize third-party risks. With a hardware wallet, you can do that easily. You become your own bank. Use the code Bitcoin Hotel at TREZOR. Then you'll even get a 10% discount on a hardware wallet. As I said, the link is below. And now the Bitcoin bulls are crawling out of the woodwork. Here comes Kathy Wood. Watch out, things are about to get serious. She's once again emphasizing her massive Bitcoin price prediction. Check this out.
It's the gateway into digital assets for institutional. It's a new asset class. That and the really substitute for gold as a store of value, another use case.
So first of all, before she even gets to the price prediction, she says here that Bitcoin is the gateway for institutional capital. That's exactly what I've often said as well. It's like opening a few floodgates here. All of a sudden, there's more access to Bitcoin capital, which can flow massively into Bitcoin. That's already very, very bullish, and it's seen here as an equivalent, a complement, or maybe even a supplement to gold. Instead of buying gold now, you can also buy Bitcoin. You can have both Bitcoin and gold, or you can just have Bitcoin. Just gold, I would even say, is almost not enough anymore. These days, the question of not having any Bitcoin doesn't even come up anymore. You definitely need Bitcoin. In my opinion, you can consider whether you want to have only Bitcoin or both gold and Bitcoin. But just having gold is not enough in my view, because nowadays you also need a flexible asset that you can easily take across borders, transfer on the go, or even send to a buddy halfway around the world at any time, without incurring major costs. So in my opinion, it's a no-brainer to have Bitcoin these days, even just as a safeguard in case something happens here or whatever, so that you can still act if, for example, the banking system fails or something like that.
Those are the two biggest things, and we haven't changed our opinion on them at all. I think we can safely say that our bull case is well over $1 million in 5 years.
So nothing has changed in the two strongest arguments for Bitcoin. ETF flows will come in, new banks will adopt Bitcoin, new institutional players, and of course, everyone needs a store of value. As she also says here, hey, people need to save their money somewhere. And what that ultimately means is that you'll be well over $1 million in 5 years. That would be the year 2025, which means that by 2030 we'll be well over $1 million. It's always interesting that Power Law says we'll hit $1 million for the first time around 2030, but only really stay consistently above $1 million from 2032 onward. So according to her, the Power Law would actually be broken here. Yesterday, I listened to an interesting interview with Larry Lepard, and he said something similar. He also said that the Power Law will break to the upside. He doesn't know whether that will happen this cycle or the next one, but there are actually proponents who see the Power Law as very valid here, yet still assume that sooner or later the whole thing will break upward. One proponent, there's been a fly buzzing around this whole time. One proponent of this is, among others, Larry Lepard. Jack Dorsey is also going to present his new Bitcoin mining chip today. I'm really curious to see what he's come up with here, so to speak. Otherwise, it just means we have to keep waiting. I'm pretty convinced that we'll see new all-time highs this year. I think we're in for another small correction phase right now. We've seen it time and again, even in the past, that all-time highs get tested, then there's a breakout to the downside, then the all-time high gets retested. And you keep bumping up against that psychological resistance, just scratching at it, and then, bit by bit, like a jumper, you climb up in a volatile way. A lot of people dream that you'll just break through to a new order high, and then there'll be this wild rally, with new all-time highs of $5,000, $10,000, $15,000 every day, with one godlike surge after another, kind of like Samson Nori described it. That's the dream for a lot of people. Maybe that dream is over, because now institutional capital is just taking the volatility and explosiveness out of it, and we're more likely to see a sleepwalking Bitcoin price that will just rise to $1 million, and the whole thing will get so boring that most people will drop out from boredom. But in the long run, Bitcoin will still win, and that's why, if you still want to buy Bitcoin, I'll put a link below to 21 Bitcoin, where you can easily and securely buy Bitcoin with us. Use the code BitcoinHotel to save up to 20% on fees. And very, very important, if you're still looking for the best tax tool, I'll also put a link below to coin tracking. Best tax tool on the market. Everyone should use it to track their portfolio here. Of course, if you have to do taxes. If you don't have to do taxes, then you obviously don't need the tool. But if you do have to do taxes, if you're in a country where you have to pay taxes on cryptocurrencies, on Bitcoin, then I'll put a link below to coin tracking. You can also generate tax reports, see which coins are tax-free and which aren't. Use the code COTEL and you'll even get a discount if you decide to get a pro account here. Absolutely recommended, folks. See you around. Peace out.